Good day everyone, this is your European Open briefing for Thursday, 8 September 2016. My name is Michael Frentiades and I am the Chief Economist here at xm.com, and these are the key points you should know about today. Basically, we're all waiting for the European Central Bank, whether it extends the quantitative easing time period, the updates to its economic forecasts, etc. The pound has dropped back on another developments. It has been relatively quiet, but in other developments, the pound has dropped back on some bad manufacturing output figures yesterday, and relatively sanguine Carney, sanguine with respect to stimulus that it's going to be needed and that he's at ease with his decisions. So, the Aussie has risen on a smaller than expected trade deficit, as well as a smaller than expected trade surplus in China. Why then was that good news? Because we had a rise in imports in China, so this is positive for Australia, and the Japanese second quarter GDP numbers were revised higher. Other things to watch on the calendar, despite the big ECB meeting, are US jobless claims and crude oil inventories, as well as some Canadian housing numbers. Now, looking at euro-dollar, it has been unusually quiet during the past day and a half. It has been trading in a very narrow range. Draghi and company could certainly shake things up, as ECB meetings and press conferences have been a source of huge volatility for the euro. Now, today there are not so great expectations in terms of the market moving with what Draghi says, but we never know with what's going to happen. What are we expecting? It's quite possible that the ECB will announce a calendar extension of QE. So the current QE program is scheduled to end on March 2017. So maybe they don't do it this meeting, but it's expected if they don't do it today, it's probably going to happen in one of the next meetings. Rates will remain unchanged, and the details of the QE programs, there are no big changes expected there, and we are going to get more hints about the outlook and the assessment of the Eurozone economy. And this is especially interesting since we have had some data on the weak side, some PMI numbers, some German industry numbers. So it will be interesting. Inflation more or less staying very, very low. So it will be interesting what the ECB's take will be on that. Next, on the pound, you see the pound lost around a cent. That's more about profit taking from a 7-week high. We had bad manufacturing output yesterday. Industrial output was good, but that was more because of oil and natural gas output, which is not very related to the UK economy. Not very related to developments in the UK economy, as one can say that the demand for that is external. Carney and other Bank of England officials said they have no regrets about the recent stimulus measures, and they could even proceed with more stimulus even if a UK recession looks less likely, given the past data that we saw concerning August and the positive bounce we saw after July, the Brexit effect that was more evident in the July data. Moving on to the Australian dollar, it has broken through 77 US cents. It is just a 3-week high, one may say, but the 1-year high is now just 1 cent away, around 78.30, so the Aussie is closing to making a fresh 1-year high. The Chinese data helped the Australian dollar because it showed imports rising for the first time in almost 2 years, and August imports were up 1.5% versus a drop of 4.9% expected, and exports also fell less than expected. So Overall, good news about China. The rising imports showing that the domestic economic situation is not that bad. So that's also helpful for Australia, as China is its biggest export customer. The Australian trade balance for July was smaller deficit than expected, so that might have had an impact at 2.4 billion deficit versus a 2.75 billion expected. So we had many numbers that were released during the relatively busy calendar. We already talked about the Chinese and the Australian trade balances. We had a better than expected RICS housing survey, but that did not seem to help the pound much. Okay, maybe the pound is a little off the lows, but it's in line with the positive data about August. Here the RICS survey coming in at 12 versus 6. The Japanese GDP numbers were revised from 0 to 0.2% on a quarter-on-quarter and 0.7 on an annualized basis. Basically, as we said, we are expecting the ECB rate announcement at 11:45 GMT and then the press conference at 12:30 GMT. We are also expecting US initial jobless claims at 265,000. Building permits out of Canada, we said. And what will be important is the EIA oil inventories. They will be very closely watched because we had very bullish API crude inventory numbers last night. So that helped US oil prices to rebound to north of $46 a barrel, and it will be interesting to watch whether that very big decrease in stock that was observed in the API numbers will also be mirrored in the EIA crude oil inventories. So that's all from me today. Thank you very much for watching and have a great day.